You're always working on discipline. You can always get a little bit better, do a little bit more fine tuning on your entry prices and where you add to positions. And so I think that again, as traders, just go into it with an open mind, saying, listen, I'm going to commit to this. There's a huge gold bucket at the end of the rainbow where there's so much money to be made, but you have to start somewhere. And I always say to people, like, even 10 minutes a day of just studying charts, in a year, you'll have advanced so much that you will literally be in a totally different financial track than you were at the start of that time.
What's up, everyone? Welcome back to this podcast. Today I'm sitting down with Gareth Soloway, and we'll discuss his journey as a trader, what things he had to go through, some tips for you, some methodologies he's using these days. So Gareth, how's it going today? Welcome on the podcast.
I'm doing really well. Happy New Year.
Of course, good to see you. It's very, very, very early in the year this time, so good to connect with you, of course. And I kind of want to go back in time and maybe tell people first sort of what you're doing these days as a trader, what kind of things you're focusing on, what things you work on.
Yeah, so I'm the type of trader that is looking for any opportunity that has a high reward, low risk setup. So I trade commodities, stocks, cryptocurrencies, really anything that gives me that opportunity. And I'm a 20-year trader, so I started in the late 90s trading, and I worked my way up, kind of teaching myself the hard way, unfortunately, which for me, it cost me a lot of money to learn because I made so many mistakes. But over time, when I stuck with it, eventually it kind of all sank in, and I just started learning how to read charts, and which essentially is the equivalent of reading human emotion. So it was kind of cool to be able to do that. It actually spans out into other parts of your life as well, to be able to read people really, really well.
Interesting. So 20 years ago, we have to discuss that for sure in more details. So I want to go back in time and tell me kind of, when did you start trading? What did that look like? What did you focus on? Like, what was the inspiration to start trading?
So I grew up in kind of this middle lower income family. My parents were both teachers. Neither of them, invested. I never knew about investing. Nothing in my life showed me anything about investing. And I got into high school, and basically it was a matter of, okay, what could I put on my resume for going to the university or the college, right? And so there was an investment club, and I joined the investment club just thinking it would be a great thing to put on the resume. And ultimately it happened to be in the dot-com bubble. And, I had my fake 100,000 account, and miraculously, I just started making so much money because things just went up in the dot-com era, very similar to the cryptocurrency run that we saw in 2021. And it was addicting, for a kid that didn't have much money, to see this, even if it was fake money, it was just mind blowing. And so right there and then I was just so addicted to being like, all right, I have to be a trader. Like, this is the one calling in my life. And I went away to college. I came out of college. I worked for MetLife, which was doing kind of financial planning. I hated it. I was kind of low man on the totem pole. I had to do cold calling, and it just wasn't my style. 1 year into that, I quit, and I took $10,000 that I saved, and I went and basically tried to trade on my own. And just like any trader, when you start out, you're not very good. So I worked 3 side jobs. I'd do bartending at night and do other things like that. The whole goal was to replenish my trading account as I was losing. And then over the course of a few years, I started to get better and better, to the point where I started to become a break-even trader, and then slightly profitable, and then eventually, into the profits more and more throughout the years. So it was a long trek, but I always like to tell people that because it shows you that everyone goes through what you're going through. If you're a new trader and you're having struggles, I went through the same thing. It just took a lot of perseverance.
What do you think made the change from you going from like being a trader learning to a trader actually making money trading? Was it a big change? Was it something small, or what made that difference?
It's lots of little things over time, but they all kind of revolve around discipline. So like, for instance, not chasing, when something's already running, you have to just sit back and sit on your hands and always know that there's another opportunity. And a lot of it was reading charts. Like, charts really do tell us so much. I often liken charts to being like a puzzle, right? And every day you get a new piece of that puzzle with the data that's coming through, and it's up to us to decipher what that means and be able to tell what the probable outcome is. So it was a lot of little things, but they all kind of were in that same genre.
I kind of want to ask you, so, when you say reading chart, people have all different ways of doing this. They have all these tools you could use. There's like 1,000 different ways to do it. What are some things you look at in terms of reading charts and looking at the charts? Are there some things you specifically look at, or is it a mix of multiple things?
Yeah, it's a little of a bunch of things, but I don't use a lot of indicators, right? So there's charts out there where you'll see them and they have so many confusing and conflicting indicators. Honestly, it even confuses me. So don't feel bad if it confuses you as well. I really just like candlestick charts. And what's amazing is that within the candlestick charts, there are different formations that show up, like a bottoming tail, a topping tail, an engulfing candle, so these little things that show up that give you the likely scenario. And what I love to do is I just love to draw trend lines, and trend lines can tell you so much. Like, let's just take a look quickly at my chart here. And what we can see on this chart, right? So this is the S&P 500 chart. And what I love doing is just playing connect the dots. So if you just connect this high to this high and then you drag that line out, look at what you get. So literally you had this high to this high and it gave you this exact high, this high, and this high as resistance or where to sell or short the market. And so again, little things like that are remarkable in terms of giving you the insight to kind of make the right decision. And I just, again, I keep it so simple. I use Fibonacci because it occurs in nature. I use moving averages, but I don't use a lot of things like stochastics, MACD, VWAP. I don't use any of that stuff, to be honest.
Now, I'm gonna hear people say already in the comments that trend lines are too simple. It's something that you hear like everywhere. You see everywhere in the books, online, everywhere. So, why do you think they work, and how exactly do you use them? Are you kind of just looking at trading these lines, or is there something else you add to it to kind of make it more reliable? What are some things you look at here?
Yeah, so for me, it's drawing trend lines, looking at double tops, double bottoms. Like it's understanding these kind of simplistic kind of things within the chart, but when you combine them all, they give you I look at charts as being at any one point there's a percentage of success rate, right? There's a probability of success. So when you get a trend line to hit and you have a time factor like a 7 count, which is getting a little bit more complex, but it's in some cycle work, or if that trend line is also at a Fibonacci retrace, it's really about putting the pieces of the puzzle together and aligning where you have multiple factors. So a factor could be a double bottom with a bottoming tail right there. Two factors will push your probabilities of success up significantly. If you get three factors, it's even higher. And so it's really about just keeping it simple, but also recognizing that you don't just want one trend line to make a decision for you. You want a trend line or something else. You want two or three factors that'll give you that high percentage chance of a win.
How did your trading style evolve over the years? Was it the same thing from when you become profitable? Did you have to change things a lot, or did it stay pretty much the same over time?
Wow. So, I mean, it was this progression, right? I mean, I started out doing everything wrong where I let my emotion kind of dictate whether I was jumping into a stock or a crypto. Well, not crypto because that came later on, but more stocks and commodities. And so, I would chase stocks that were already running up and I'd wonder why, I would be in the money for a little while and then it would ultimately end up being out of the money and I'd take a loss and I couldn't figure out why. And then as over time, you start to recognize what you're doing wrong. Like having a trading journal is so important early on in your career, because what you'll do is you're writing down what trade you didn't make money on. And those are always the most important. And then you want to write why. What did you do wrong? Well, I bought it when it was already up 50%. So it was already running up, versus buying at a downsloping key trend line, for instance, of support. And so you have to be someone who's willing to admit that you've made a mistake. You have to be someone who's willing to really learn from those mistakes and write them down and really understand that you're going to make mistakes. But as long as you're improving and learning from them, your curve towards profitability gets shorter and shorter, and you'll go more vertical on profits.
What's your go-to journal? Is it like a pen and paper thing? Is it more like online? Is it more a screenshot-based journal? Is it more like data spreadsheets? What do you like to do with your journal?
So at this stage of my career, being 20 years in, I don't do a journal anymore. But when I was younger, I did one that was a paper journal. And the reason why I did that is because it was something I could keep right next to my bed at night. And I found it very helpful that before I went to sleep, I would always make sure to make those journal entries, think about the trades from the day, and then write out, okay, what could I have done better? What did I do wrong? What did I do right? And then looking at it on a weekly basis, right? So when Friday came around, I would then review from Monday and kind of reinforce those kind of rules about what I did wrong. Okay, don't chase, don't buy, here, don't do this. And I think that reinforcing of having it right by your bed really leaves it in your mind when you go to sleep, and it makes it more likely that you're going to kind of absorb the lessons.
So it seems like from what you're saying, the core strategy didn't really change. You're still looking at the same sort of trend lines. But the thing is, you used to be jumping in the wrong conditions before when you were trading earlier.
Exactly. Like the charts don't change. If you could look at a chart going back to the 70s, 1970s, the 1920s, I mean, charts don't change. It's that we as humans, we tend to want to always, we have this greed and fear, right? We're ruled by greed and fear, the two most powerful emotions. And so it's a matter of learning to control that and saying, listen, if I'm going to be a successful trader, I can never be greedy or fearful. I always have to be neutral. And by being neutral, you then decide, okay, now I can look at the chart with no bias and look for specific factors that will trigger me to get in or get out of a chart. And I think that's the key, is that as soon as we let that emotion creep in, it then becomes an emotional trade. It's where the market will eat you alive because it's going to feed off that emotion and push you to your extremes.
So one of the things that I think all traders have to learn at some point is sort of dealing with when their strategy doesn't work well. Like in some conditions, some environment, your strategy might not work the best. You might get like worse results. So I'm curious to hear what kind of situation makes your strategy work the least well, and how do you kind of deal with it? Do you change something? Do you just stop trading for altogether, or do you go in different markets? How do you deal with that?
Yeah, so that's a great question because I think as a trader, the traders that adapt as quickly to a changing market as possible are the ones that will survive, right? So we just went through this epic bull market in 2021, going into kind of a bear market in 2022. In 2021, bad news didn't really matter and everything just went up. So there were technical ways of trading where you could buy almost any dip and you would make money. As soon as we hit the bear market, that didn't work anymore. And so as a trader, you have to be able to recognize those changes. And just like you're saying, there are things that worked a year ago that won't work today. And again, you have to, as a trader, recognize that as soon as possible and adjust for that. Because again, if you're stubborn, and listen, I'm a stubborn person, but I've learned to be a robot in trading, you then will adapt and make money in no matter what type of market you're in. So I mean, there's definitely things that don't work as well. One of my policies is that if I have a technique, like let's say there's a setup that I love taking, if I lose on it 3 times in a row, then I stop that for a while and will reevaluate. So I'll still look for that signal, but I'll keep track and I'll kind of keep a log of whether it's working or not. And then if it starts to work again, a high percentage of the time, I'll go back to it. But once it fails 3 times in a row, I kind of step back from it.
How do you do that exactly? Keep a demo account with these other trades that you track, or how do you exactly keep track of that?
So with once something fails 3 times in a row, I basically just paper trade the pattern, right? So at that point, there's no way I'm going to commit more money to any sort of setup. It's more just saying, okay, let me see. I see this in the chart. It failed 3 times in a row. Let me just follow it and check back in tomorrow. Did it work this time? And ultimately, what I look for is trades that work out or setups that work out 70 to 80% of the time. If it's 60%, it's too close to gambling. 50-50 is gambling for sure. And so you really want to find those setups that are 70 to 80%. So it has to prove to me that it's successful 70 to 80% of the time again before I step back in and we'll try it again.
Would you be able to guide our listeners here to an example of a trade you took recently, or some kind of trades that you took not long ago you can kind of share and guide them through?
Yeah, absolutely. So we can go through a couple little trading opportunities here. Let me show my screen again, and then we can go through a few little different things here. So this is the S&P chart that we're looking at. Now, one of the things that I'm watching on this chart is what would be referred to as a bearish flag pattern, right? So we've just hit this trend line. We had a sharp sell-off. And now basically what you're doing is you're creating this formation. After a sharp down move, this would be considered a bear flag, and you would actually expect a breakdown of this pattern over the next, let's say 1 to 2 weeks. The target on this would be to the downside. So if you're looking to short something, this could potentially be a good short. 2, 4, 6, 8 sideways candles. I would look probably for tomorrow, maybe a small bounce tomorrow, and then the rollover there. A couple other trading opportunities here. Let me think of a couple here. So let's take a look at Apple. Apple's a good one here. So if we look at the Apple chart, this was a key trend line that I was following, and see how you could go back to 2020 and this trend line hit here, it hit here, 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 and then broke. Once that broke, that was a major technical short signal for a down move in the stock itself. And again, that was perfect in terms of the downside move. We're obviously selling pretty sharply on the chart at this point as well. So, I mean, there's lots of things here where, these type of break points, you can see that, all right, that's a significant break because it held here and here and here. Once it breaks, there's going to be like a floodgate letting open or releasing major kind of kind of a flow to it, if you will. Let me look at a couple others here. So another one would be BX. This was a trade that we recently took. And you can see how this downsloping trend line, it hit here, kissed it here, 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 here. And so what I do is I said, okay, it's hitting support here. Every time it hits, it gets a significant bounce. And so why don't I just buy right here? And you can see this is a current trade I'm actually long in. You can see the bounce right here is coming up, and we are in the money about $3 or so on this trade at this point. So it's just a matter of, again, looking for these similarities that occur over and over in charts and putting yourself in a position where you have a defined risk with obviously a very good reward.
So trading stocks, you're not looking at any kind of volume when you look at these reversals, these breakouts, or are you just looking at the price action?
Yeah, so I look at volume in certain scenarios, like for instance, when the markets are rallying on light volume or a stock is rallying on light volume, I don't trust it because in general, what that tells me is that there's not big money buying the stock. And so if you just have some small investors buying it, that's not a very good bullish signal. So for instance, when the markets are floating up on light volume, be very, very wary because the big money could be waiting to sell into it and kind of crush it back down. On the other side of the coin, when you see big drops in a stock or in a crypto, that's where you get those kind of heavy volume candles, which could be capitulatory or capitulation, which shows a bottom. The key is when I see that, I want to see something like in the candle, like a bottoming tail that actually signals that institutional money is buying, right? So for instance, for those of you that don't know what a bottoming tail, it's when you're at the lows of a chart and you have a heavy volume sell-off, you get this reversal back up in that same candle and you close in the upper portion. So you're still having a down day, but there's a long tail at the bottom. And that what that shows you on heavy volume is that the volume was downside, but then buyers came in and swooped in heavily and bought that to the upside. And that again is a reversal signal. So those are how I use volume, but I don't use volume on a daily basis because again, you'll have light volume-ish days, heavy volume days, but it's really the crazy moves, the really crazy heavy or light volume days that you want to pay attention to.
So you're trading stocks, cryptos, and I believe some currency index as well. Do you differentiate from all these things, or do you trade the same methodology on all of these exactly the same?
Yeah, so the beauty of it is with charting, it's all the same. And I think this is the most fascinating thing about charting is that when you're trading a chart, as long as there's volume, meaning there's participants in the market, a lot of them, you're going to get the same sort of formations. And the reason you get the same sort of formations in a crypto chart, a stock chart, a commodity, a currency chart is because who's buying and selling, right? Investors. And so investors, greed and fear is universal. So you're anytime you're trading a chart in anything, it's all about what are investors, what's the psychology of the investor? Are they buying? Are they selling? Are they greedy? Are they fearful? And so you're going to see the replication of charts over and over again. I mean, it's amazingly fascinating how it's all about psychology, and charts are just a representation of human emotion.
And one thing I want to discuss is now we're in the week just leading up, just after actually the holidays and New Year and stuff. I'm guessing you didn't trade back during like between Christmas and New Year. And what would be some of your tips for kind of going back in the market next year? Because people might be like from the holidays or they're not so clear about going back to trading. They might be slow to start. What are some of your tips or things people can do to kind of ease back in the market after the New Year and Christmas?
Yeah, and I think the biggest thing I would say is, take it really slow, right? So when you come out of a holiday like New Year's, there could be light volume in the market. So it may not be totally trustworthy on any individual move. Kind of let things settle, let the dust settle, let things come back to a normal pitch. And I think that's one of the key things I would look for. And I also think that you just want to keep to your guns in terms of if you have a level and there's some volume in that chart and you hit the level, then you have to get to a point where you trust that. It has to be to a point where you become a robot, where a level's a level. It doesn't matter what you personally think or what you don't think or what your friend's telling you. Is your friend saying, oh my goodness, this is so scary? It doesn't matter. You got to trust the levels. And again, what I do is I now at this point in my career, I leave it all to the probabilities. So I look at the chart. I've taken all the factors. If the probabilities are there, it doesn't matter if I believe in it or I don't believe in it. It's a trade and I just do it. And I look at it in the big picture. If I do 1,000 trades and I have an 80% win rate, I'm going to win 800 out of 1,000 times. I'm going to absolutely have losses, but it's all about the long-term average and the long-term win rate.
And I'm kind of curious because you also are running a trade room. Are there some mistakes you see your traders make? Not just when they come back from holidays, but in general, what are some of the things that they kind of do wrong? They tend to make mistakes on. What are some of the common mistakes people make in trading?
So in terms of mistakes that people make, yeah, I mean, I think for me, I look at it and I say, listen, we're all going to make mistakes, but it's all about improving upon those. I think the common mistake that people make is that they see something running up or running down. Let's take the running up scenario. And when it's running up, slowly emotion starts to build in them. And they think, oh, well, if it's already up this much and it keeps going up every candle higher, let me jump on because it's going to continue up. And what I found is that by the time most people jump in, it's just about to go the other way. And the same thing on the sell side. When you get most panicked, that's where you actually start to see the bottom being in. So once the market flushes out the retail investor, that's where the bottom is in. So the biggest thing I would say to investors is learn how to read charts, because once you learn charts, it then takes the place of emotion. It's like, okay, well, is the chart at a level? No. Okay, well, I sit on the sidelines. I can just sit on my hands. Most investors want to overtrade. The less trades, I actually became more of a profitable trader when I traded less. And I know it's counterintuitive, but the less you take, the more kind of keen on the good setups you're going to take. And that means your win rate goes up. And ultimately, you won't be fighting as many losers out there.
Interesting. So that's also a very good lesson. It's not because you are, let's say, missing trades, but it's because you're picking the good trades, actually the one that make more sense, that are more reliable, that gets you better results. So totally good idea there. Yeah.
Very true.
What do you think is coming next for crypto in terms of trading? Because there's obviously a lot less volume now than there was before. We don't know if it's going to go back up. We don't know if it's going to go back down. But how do you see this as a trading perspective now?
Yeah, so with crypto, I'm definitely in the camp that I love Bitcoin long term. I think crypto is here to stay. I've been kind of bearish since about 65 to 69,000, which was in 2021. I talked about 20,000 as being a key level. We're now even below that. For me, I have a downside target of around 9 to 10,000. I think so. I still think there's some more downside, but I will say this is that by mid-year, you should have a bottom in crypto. And I think that will coincide with regulation. So I know everyone's so scared of regulation, but after FTX, there's really a need for it. You have to have transparency. There has to be standard reporting and audits and all these type of things so that investors feel confident in investing in these crypto exchanges or cryptocurrencies. So I think that, again, you get a bottom when you get regulation, because that will enable big money to feel confident enough to come into the crypto space.
How do you get these targets, by the way? Is it based on technical levels, or is it based on, so like a guess, or how does that come from?
Yeah, so for my crypto downside targets, there's a couple things that helped me arrive at that target. So number one, there's just below the $10,000 level will be max pain. So we know that the even number of 10,000, there's going to be a bunch of stops right below there. The market tends to push for bottoms and bear market bottoms, and you can go to 2009 in the stock market, or the 2002 lows of the stock market, or even other cryptocurrency bottoms. It's all about pushing the investor to the extreme to get the maximum out of the trade before it finally turns around. So I think 10,000 is that break point where you scare the most people to kind of get them to freak out. And I also think that you have to look at, and I looked at like FTX as a Lehman Brothers moment. So Lehman Brothers was the big bank that collapsed in 2008. It led to part of the financial crisis. And from the Lehman collapse, if you mirror that with FTX, it took about 6 months for the stock market to bottom, and it took about a 45% drop. So if you factor those two things into the crypto markets with Bitcoin, it takes us right around that $9,000 level and right around May or June of 2023. So that's kind of where I'm isolating it down. So it's part technicals and it's part history. And history, again, tends to repeat because we as humans, unfortunately, don't learn from our mistakes very often.
I'm sure people are going to ask, what does the day in the life of Gareth Soloway looks like? What are some things you do in your day-to-day? Like, what's your routine? Because you're not necessarily day trading all day, which is interesting. You're mostly swing trading. So what does that look like on a day-to-day? What are some things you spend time on during the day at this point?
Yeah, so my day, usually I wake up a little after 4 in the morning. I check the markets, the futures and stocks. Stocks in general open for, at least I can trade stocks as early as 4 a.m. Eastern time. I usually will try to go back to sleep if nothing too crazy has happened. I try to get a couple more hours before the kids get up in the morning. I got to make them breakfast. I usually have my laptop on the kitchen counter with my trading stuff up so I can be following along while I'm cooking breakfast. And then basically by 8 o'clock, I'm in the office and I'm starting to focus in. I have some meetings. I do day trading in the morning, swing trading throughout the day. I do a few interviews. And then my biggest thing is I try to get to the gym. So I sit all day in this chair. And so it's definitely important for my mental sanity to kind of get my body moving. So I love to do that. And then I usually end up with playing with the kids in the evening. So it's a day that is busy, but it kind of has a little different. I try to keep things mixed up a little bit in there with some exercise, some chart study, some family time. And that way it really does help you keep your sanity.
Ultimately, yeah, trading is all about learning to deal with money, and kind of if you're not comfortable with the money, then it's really hard to make any money trading. So did you had to work on like dealing with money, dealing with bigger amounts of capital over time, or was it something that you could kind of ease into pretty easily over time?
Yeah, I think in terms of like money management is really, really important. It's something that even at this level of my career, you're always fine tuning it, just like reading charts. Like I want to be clear on that is that even at this level of my career, doing this for 20 years, every day when I'm studying charts, I'm learning a little bit new. And so you never really finish that. And same thing with your educational side of discipline. You're always working on discipline. You can always get a little bit better, do a little bit more fine tuning on your entry prices and where you add to positions. And so I think that again, as traders, just go into it with an open mind saying, listen, I'm going to commit to this. There's a huge gold bucket at the end of the rainbow where there's so much money to be made, but you have to start somewhere. And I always say to people, like even 10 minutes a day of just studying charts in a year, you'll have advanced so much that you will literally be in a totally different financial track than you were at the start of that time.
Why do you think that some traders are really trying to put a lot of time to learn trading, but they just don't get anywhere? They just like spend a lot of time learning. They attend like all these trading rooms, perhaps. They read all these books. Maybe they're like on YouTube all day, but they're not really advancing in their trading. What do you think that causes that?
So I do think that does happen. I mean, number one, a lot of it comes internally, right? So like I could teach anyone how to read a chart, like what is a bottoming tail, what is an engulfing candle, what is a double top, etc. But ultimately to implement it, you have to be able to control your emotions. And so I really do think that there's a lot of people out there, and that's the hardest thing to do. Is the hardest thing for me is to really get to this point where I did not budge. I did not click an entry unless it met multiple criteria. And that actually meant that some days I sit here and I don't do any trades. I just sit on my hands and do no trades at all if there's no trades to be had. So I think that again, as investors come into this and want to learn, it's important to say, okay, I can learn how to read a chart, but that doesn't make me a pro. I have to be able to kind of implement that with my discipline, and then you start to see the results. But I think you could also look at it like some people maybe just aren't made to be traders. I don't believe that, but I mean, there's always that chance. I do think that almost anyone can do this job if they really devote themselves. And like, listen, the one thing I'll say too is that being a trader isn't something you can do for like at some point you have to, if you're going to be a trader, you have to devote a large chunk of your day to it. Because always remember, there are algorithms, there are computer programs that are run by these billion-dollar hedge funds that are going to look to exploit any weakness you show. And if you show it, they're going to take your money. So being a part-time investor is going to be really hard, or a part-time trader, if you really want to make it big in this industry.
What are some things you would tell people to focus on if they're not making any progress in trading, or they're not having any good results?
Oh man. So I think, number one is that most traders, when they go into trading, they trade too much money relative to their risk tolerance. So I would right away say, okay, tone down your share size, or tone down the amount of money you're investing in a trade in crypto. The key is prove to yourself that you can trade properly off the chart. When you put too much money in a trade, it creates that emotional response where you're not going to follow the chart and what the chart is saying. You're going to instead do what your gut is telling you, like, oh my goodness, this is getting scary, so let me get out, versus, wait a minute, it's coming down here and we're just about at support, so this is where we should bounce. And so I think that working on lowering your amount invested is really, really important. If I had my perfect world, I would strap everyone with a heart rate monitor. And I would say, listen, when you enter a trade, your heart rate should not budge one bit from what it currently is when you're just relaxing and watching TV. And if that's correct, then that's the proper share size or coin size that you're doing. If you get in a trade and all of a sudden your heart rate starts to go crazy, that's telling you it's too much. tone it back down. And so there's a lot of self-reflection that needs to be done for investors and traders to where they get to this kind of pro status. And it takes time, right? You start there, and if your heart rate isn't going crazy, then the next time you do a little bit more. You look at your heart rate again. Are you getting too excited? Are you getting too nervous? No? Okay. Next time you bring it up a little bit more. Then you see, oh, wait a minute. I'm getting a little too nervous. Let me tone it back down. You find your zone of what your tolerance is. And then what you'll find is as you learn the charts, you're going to trust the charts, and you'll be able to actually raise your amount that you're investing little bit by little bit more and more because you begin to trust the probabilities in the charts.
Interesting. I kind of heard that before, but it's a really good advice that people don't really talk about too much. So that's a good measure, actually. That's a good one. Are you using any kind of wearable to track your trading these days? Any kind of like heart monitor stuff? Or I know some traders are using it, day trading, but I'm not sure if you've seen that before.
Yeah, so I don't for myself at this point because at this stage of my career, I don't. I mean, it might be beneficial, but it's not as beneficial as it would have been in my early career. I wish going back that I had done it because I would have lost a lot less money early on. But I will say this is that if I ever open a trading room with people that come in to learn, I would absolutely have heart rate monitors, and I'd have a big screen where it shows everyone. And then we could be watching each other and being like, oh, you're doing too much, tone it down, or, oh, you're doing fine. You can, it would be really a cool concept to kind of create that type of thing.
It's also a time of the year where people set resolutions, or at least they set something they want to improve in the coming year. I'm curious to hear if at your stage, like training for 20 years and more, are there some things you still want to work on, some things that you still want to get better at, and what are these things exactly?
Oh yeah. So I mean, there's always things like, I mean, even at this stage of my career, there's trades that I get into that don't work out, and then I have to kind of trade around the position. And sometimes I end up taking losses on them. And it's definitely important to kind of look at what I did wrong. Could I have improved that? So there's always stuff that you can always improve upon. And I think that's the greatest thing about it is that you're never done with your education, right? You're never fully at the point where you're like, oh, I've learned everything I can. This is where I am. There's always room for improvement, which means that I can even get more profitable in my life as a trader, even at my stage. And I think it's a cool thing to think about. Like there's always this upside angle.
So where can people find you, then connect with you, reach out after the interview? Again, they see your training room, see your stuff, see what you're doing, and connect with you.
Yeah, so I have a trading room where I call out day trades in the morning session. That's awesome. That's for sure awesome. We had 4 awesome trades on the SPY today. Then I do swing trading as well, where I give out my swing trade signals. And then I also do that for crypto as well. So swing trade stocks, commodities, and cryptocurrency. And so it's really like the beauty of it again is there's a lot of people out there that are like, oh, I only trade crypto, or oh, I only do stocks. And it's like once you learn the charts, they're all the same. You can, like, a bottoming tail on a crypto chart means the same thing as a bottoming tail on a stock chart. And so it really broadens the amount of opportunities that you have. And it actually means that you can make more money.
And what's your website name so people can check it out? We'll leave the link below also in the description for people to click on it.
InTheMoneyStocks.com is my website for stock trading and commodities. And then VerifiedInvestingCrypto.com is my crypto website. Exactly. Thank you.
Awesome. Perfect. We'll leave the links below the video here in the podcast show notes as well, so people can check it out and click there. And Gareth, I appreciate your time. Appreciate the advice you gave here to my listeners. It's very early in the year, so I appreciate you connecting and being here. It's awesome. I hope we can talk pretty soon and discuss more stuff in the future.